What's going on YouTube? Welcome back to another video. I'm Roger Arnold and this is Everything Wealth. This video I'm going to be talking about dividend investing. I'm going to tell you about the stocks that I've invested in and why. But firstly, I'm going to talk to you a little bit about what dividend stocks are, just to give you a little background as to what they are and why they're attractive to some people. I'm going to try and brush through this relatively quick because I don't want this video to go on for too long. So as I mentioned in the previous video, dividend stocks are when you own a portion of a company and that company has a little bit of excess cash. It pays it back to the shareholders in a form of dividends, right? This can be attractive to you, which encourages you to buy more stock just because you get a payout. Now, it varies from company to company how they pay their dividends. They can either do monthly, quarterly, annually. It varies. You have to do your research on the particular company. It also varies with the company as to whether or not it does pay dividends. You tend to see the younger companies not pay dividends because the excess cash they generate, they reinvest into the company to grow. So it depends on what type of investor you are as to whether or not you get a dividend stock in the first place. See, if you want capital gains, a young company that's growing relatively quick, you want to invest in them knowing that in a few years' time they can be worth a lot more, and then you can just liquidize your position and take the money out. A really good example that I've heard that represents dividend over capital investing is a bird in hand is worth two in the bush. So a lot of people prefer investing in dividend stocks because they feel comfortable knowing that they're going to be receiving a small payout at set periods of time. Whereas with a capital investing stock, you don't know if that company is going to perform as well as you'd hope. So the phrase goes, a bird in the hand is worth two in the bush. You invest in a company that is going to pay you quarterly, or you're going to risk investing in a company that may be worth more in the future. That's why people prefer dividends and they tend to go towards that way. I'm trying to have a varied portfolio. I think it's very healthy to have a variety. You don't want to put too many eggs in one basket. Having a balance between capital and dividend is a really good idea in my opinion. So what type of companies pay dividends? Well, like I said, you don't have the young companies paying dividends because they tend to reinvest it into themselves to grow. The older companies, the more established companies, tend to pay out dividends because they are financially secure and they're very stable. One of the things you've got to be wary of is with companies that pay out dividends, if they are increasing over a period of time, their dividend payout, it could suggest that the company is actually struggling and they're paying out more dividends to keep you attracted until they collapse. So you need to do some due diligence as to which companies you are investing into. So older companies that are more secure tend to pay out dividends because it shows that they are confident in their future and in their prospects, and it also shows financial security. They can afford to pay out a dividend to shareholders. This will encourage more people to invest in them and it secures their position. Of course, sometimes if a mature company does see that it can reinvest its money into itself to grow further, it may reduce its dividends or cancel them altogether. This does have negative effects though. Stock prices can drop if a company decides to stop paying dividends, as we've seen in the past. So I've given you a quick 101 on dividends. I'm now going to just talk you through what dividends I've invested in this month. I've only invested in 3. I want to point out that I'm not a financial advisor. These are just stocks that I've done a little research on that I'm interested in, and I think they align with the type of investing that I'm trying to do. I wouldn't recommend you copy me, but you're more than welcome to do your own research and look into it. Okay, so the first dividend I invested in was an S&P 500. It's more specifically the Invesco, so it's a high dividend, low volatility dividend stock. So the reason I invested in this stock is for obvious reasons in the name. It's a high dividend, low volatile stock. It's a combination of a lot of companies, so it's a very safe stock to invest in. It's not going to rise a dramatic amount, but it's not going to fall a lot either if anything goes wrong. So I should expect a steady grow, nothing crazy, but a steady dividend payout as well. The next stock I invested in was a little bit of a left ball. It's the Bank of Nova Scotia. This stock has a 6.3% dividend yield and a 1.6% payout, which is pretty good, pretty high. It's safer than the American counterparts, and management have already come out and said they see no reason why they will not be profitable for the rest of the year. It's decreased less than the American counterparts at the beginning of the year during the initial crash. It's cheap, it's not too expensive. Its price to earning ratio is 9.1, which is lower than the American counterpart of 11.8. This means relative to the American banks it's valued lower than it should be, so there's a lot of room for growth, so that's why I've chosen that stock. So the next stock I invested in was ExxonMobil. This has a 10% annual yield, which is a 2.5% payout. At the time that I bought it, it also was due to pay out in 2 days, so that was one of the main reasons I invested in it, knowing that within 2 days' time I'm going to get 2.5% dividend back. I wanted to invest in the oil and gas industry, and ExxonMobil actually dropped the least compared to the rest of the industry. I've noticed that they have a strong balance sheet, and they also have a very strong correlation to the price of oil. So assuming oil increases in value, ExxonMobil shall increase alongside. Looking at oil prices in general, they've got a pretty strong fundamental layout, so we should expect oil to start to increase over the next couple of months, and therefore Exxon. Another reason I was attracted to them is ExxonMobil have reduced operating costs throughout the company to ensure that they can afford and continue to pay dividend out to investors. That's promising to me because it suggests they have a lot of confidence in themselves and their financial security to make it through this slump in the oil price, and therefore a later time when they start to increase, I'll reap benefits from that. So those are the stocks that I invested in. Nothing crazy, I only bought one of each. I was also going to invest in the Vanguard S&P 500 All World High Dividend Stock, ETF, sorry. The reason I was going to invest in that but didn't was because I'd actually missed out on the quarterly payout, so I wouldn't see any dividend payback for 3 months. So I thought I'll wait and I'll get that closer to the dividend payout period. So that's a quick brief of dividends and the 3 stocks that I've invested in. If you want to get involved with dividends yourself, I'd recommend the index funds, just because they have a good spectrum of companies within them, so they're relatively safe, but you also can dip your toes into the dividend pond. If you got any questions or comments, leave them down in the comments below. Don't forget to hit the subscribe if you want to see more videos about wealth and investing, and hit that like button if you enjoyed this video and found it informative. So that's a quick dividends for you. I may go into more detail about them in a later video, so stay tuned and I'll see you next time.